Hi, everyone. We have a holiday shortened week. This is Dale at TradeGATEHub.com, sponsored by TradeView Markets. And you have to keep in mind during holiday weeks, especially this Thanksgiving week, that volume is extremely thin and you can have very exaggerated moves. So here's my take. We have the Fed minutes on Wednesday. I believe that last week I talked about resistance in cable between 118.50 and 120, and so far it's still holding. We need to take out this 117.40 level. I do believe that's going to occur, and that could take us all the way down towards the 14.5 level. So looking for the dollar to rally. I think the dollar has 109 to 110 in it. Could happen on the Fed minutes this week. So I like the short euro, short pound, short Aussie. One of the things I talked about last week was the weakness in copper. And, look at this. We've negated the breakdown. Was having people get out of Freeport-McMoRan. I'm sure it's not having a great day today either. And I want to talk a little bit about the yen. That's up about 100 pips today. I think there's a possibility we could rally back towards 144, 145, which was the breakdown of the wedge here. That could be a shorting opportunity. And now I want to cover the metals, and I'll start with the gold-silver ratio, which is not quite breaking out yet. I do expect a breakout. I think it could happen this week, especially if the Fed minutes worry people that the Fed is not close to a pivot, because then after that, I believe that we have a speech by Jerome Powell in early December. I think we have a PCE, their favorite inflation indicator, coming as well. I think that could generate a breakout. Looking at gold, looks like, it got pretty oversold. Maybe we're going to rally back here to 1870, 1880. I don't believe that we're going to get a new high on the gold. It's possible it could try 1800 one more time, but I'm thinking that if we take out this prior high right here, let's call it 1730. Let me draw a line there, because that was the previous top, and that would negate the triple bottom. So let me just draw a little horizontal line against these highs right here. This is going to be important for gold to hold that 1728, 1730 level. Underneath that, we could get all the way back down to checking the breakout. The silver still looks very weak to me. I know it's trying to rally a little bit off these early morning lows, but like I said last week, closing back under 21 was not such a great thing. That was a prior breakout. We start to continue a decline. I think 1950 is viable. And actually, I've been saying I wouldn't be surprised if we get some type of washout all the way into new lows, depending upon what kind of rally we have in the dollar. If it turns out to be more than just a bounce to 109, 110, and then another sell-off. Also think S&Ps are vulnerable here with copper and WTI still under pressure. Again, the binary event, China opening, China not opening. You have WTI just getting massacred. And I bet the XLE is getting massacred too, which is something that if you ran our trading community, I warned about before this happened. Okay, pretty nasty gap there. So I was saying get out of silver longs and get out of energy longs, basically get out of commodity longs. So the oils are taking it on the chin. I think there's more downside in the oils. The market's being held up mainly by tech and semiconductors in particular, but oils were a leading group in the market. So let's get to the S&Ps and what I think could happen here in the next several days. I think that we're vulnerable to a liquidation break here in the S&Ps. that if we start taking out Friday's low, which we've tested a few times, this moving average here on the 4-hour, if we start taking out 39.40 and start closing underneath it, I think we could see a quick drop to 3,800. Under 3,800, we're talking about 36.50. So be careful in this thin, illiquid market environment. I'm still remain negative on most markets. Really, they're all one market. The dollar's up, everything's down. The dollar's down, everything's up. So I would pay attention to that. Also, I've had a little bit of a change in heart on yields, which I think could be the driver. And the 10-year, let me just pull up the 10-year yield here, which is down quite a bit here. But when you look at the daily, it's looking somewhat corrective here. Okay, so maybe it's going to be the Fed minutes that drive it up for one more high, maybe up towards 440. I think that's going to cause pressure on all markets. So be careful on this holiday period. I'm bullish a dollar, bearish almost everything else. And it's an interesting time. I'm not long-term bearish stocks, but looking for a shakeout. And speaking about stocks, we have Super Bull, Dave H. Contrarian with us tomorrow. So be there, tune in for that. And then we have a guy who specializes in silver on Wednesday. So we're going to fill up the week with some real good content from outside experts. Tune in for that. Mike will be with you in an hour and 20 minutes. I took the short pound last night and already covered half. In this environment, don't forget to take partial profits. Again, this area right here at 1740 under this candle, that was 1762. Yeah, 1762. So under 1762, that's about 300, could take us to 14.5. I think that's a possibility in cable. So good hunting, everyone. Invite you to try TradeView's demo account and get used to the platform. Invite you to compare our spreads at TradeView compared to your broker currently. And we have both MT4 and MT5, and you could trade everything at TradeView. So good hunting the rest of the day. It's okay if you don't do anything this week and wait for the players to come back, but that's my take. And my take is that I think the pressure is going to be on the longs of everything if the dollar keeps pushing up.